Used car prices have been one of the biggest financial frustrations for American consumers over the past few years, and as we move toward 2026, many people are asking the same question: will prices finally come down, or is this the new normal? To understand what used car prices may look like in 2026, we need to look at the powerful forces shaping the auto market right now, including inflation, interest rates, new car production, electric vehicle adoption, and changing consumer behavior. The answer is not simple, but the trends tell a clear story of gradual change rather than sudden relief. By 2026, used car prices in the United States are expected to stabilize more than they have in recent years, but they are unlikely to return to pre-pandemic levels. During the early 2020s, supply chain disruptions, semiconductor shortages, and factory shutdowns caused new car inventories to collapse. This pushed millions of buyers into the used car market, driving prices to historic highs. While production has improved since then, the ripple effects are long-lasting. Fewer cars were built during those critical years, which means fewer used vehicles are entering the market now and in the future. That missing inventory will still be felt in 2026. Interest rates will play a major role in shaping used car prices. If borrowing costs remain elevated through 2026, demand for used vehicles may soften slightly, especially for higher-priced models. Many buyers rely on financing, and higher monthly payments limit what people can afford. This could put downward pressure on prices, particularly for luxury vehicles, large SUVs, and trucks with higher mileage. However, if rates begin to ease by late 2025 or early 2026, buyer demand could surge again, keeping prices firm. The used car market is extremely sensitive to credit conditions, and even small rate changes can move prices quickly. Another key factor is new car pricing. Automakers have become comfortable selling fewer vehicles at higher profit margins. Many manufacturers have shifted toward premium trims, subscription features, and advanced technology packages that raise sticker prices. If new vehicles remain expensive in 2026, used cars will continue to look attractive by comparison, supporting higher resale values. Entry-level new cars are becoming rare, and this pushes first-time buyers and budget-conscious families into the used market, keeping competition strong. Electric vehicles will also influence used car prices in 2026, but not in a uniform way. Some used EV prices have already dropped sharply due to rapid technology improvements, concerns about battery degradation, and shifting tax incentives. By 2026, used electric cars with older battery technology or limited range may be significantly cheaper than comparable gas vehicles. On the other hand, newer EVs with long range, fast charging, and strong brand reputations may hold their value better. This split could create new opportunities for buyers willing to adapt to electric driving, while traditional gasoline vehicles remain in high demand in regions where charging infrastructure is limited. Pickup trucks and SUVs are expected to remain among the most expensive used vehicles in 2026. American buyers continue to favor larger vehicles for work, family use, and lifestyle reasons. Trucks in particular hold their value extremely well, especially models known for reliability and towing capability. Even with higher fuel costs and growing environmental concerns, demand for used trucks is unlikely to weaken significantly. Compact sedans and small cars, however, may experience more price pressure, especially if fuel efficiency improves across the new car lineup. Vehicle age and mileage will matter more than ever in 2026. Buyers have become more cautious after paying record prices in recent years. A 5-year-old car with low mileage and a clean history will command a premium, while high-mileage vehicles may see softer pricing. Reliability reputation will be critical. Brands known for long-term durability are likely to dominate the used market, as buyers look for peace of mind in an uncertain economy. Certified pre-owned programs will also grow in importance, offering warranties and inspections that justify higher prices. Regional differences will remain significant. In states with strong job growth and higher incomes, used car prices are likely to stay elevated. Urban areas with good public transportation may see slower demand growth, while suburban and rural regions will continue to rely heavily on personal vehicles. Climate and geography also matter. Vehicles in warm, dry states often command higher prices due to lower corrosion and wear, and this trend is expected to continue in 2026. Inflation will influence how consumers perceive prices, even if nominal values stop rising. If wages increase alongside inflation, buyers may feel less pressure even when used car prices remain historically high. However, if inflation outpaces income growth, affordability will remain a concern. The psychological impact of price fatigue is real. Many consumers are delaying purchases, repairing older vehicles, or turning to longer loan terms. This behavior could slowly cool demand, but it also limits supply turnover, keeping inventory tight. Technology will also reshape the buying experience by 2026. Online marketplaces, AI pricing tools, and instant appraisals are becoming more accurate and widespread. This transparency reduces extreme price swings and makes it harder for sellers to overprice vehicles. While this may help buyers avoid the worst deals, it also means good vehicles sell quickly at fair market value, leaving little room for bargains. Negotiation power will depend heavily on timing, location, and vehicle type. Overall, the most likely scenario for used car prices in 2026 is moderate stability with selective declines rather than a dramatic crash. Prices may edge down in certain segments, particularly older EVs and high-mileage vehicles, but strong demand, limited supply, and high new car prices will continue to support the market. Buyers hoping for a return to bargain-level used cars may be disappointed, while sellers should not expect the explosive appreciation seen in the early 2020s. For consumers planning to buy in 2026, preparation will be key. Monitoring interest rates, shopping across regions, and being flexible on features can make a meaningful difference. For sellers, maintaining vehicle condition, service records, and timing the market carefully can help maximize value. The used car market is no longer just about transportation, it reflects broader economic forces shaping American life. In the end, used car prices in 2026 will tell a story of adaptation. The market is adjusting to a new reality shaped by technology, supply limitations, and shifting consumer priorities. While the chaos of the past few years may fade, the lessons remain. Cars are lasting longer, buyers are more informed, and value means more than just price. The used car market of 2026 will reward patience, research, and smart decision-making more than ever before.